let's get straight into a look at the economic picture that we face over in Zimbabwe, because last week's budget, that of course being announced on Thursday, really putting the spotlight on the state of the Zimbabwean economy, especially where we've had economic growth for 2012 revised downwards from that initial projection of 9.4% all the way down to 4.4%. What did the market make of that announcement?
Yes, I think the revision was kind of expected. I think the downward revision, this is the second time. The initial revision was to 5.6, and then it was revised further to 4.4. I think contributory factors have been underperformance in some subsectors of the mining sector. When you look at chrome and coal, and to some extent diamonds, so there's been underperformance in that regard. Again, contributing to that underperformance has been manufacturing sector, where we saw the capacity utilization falling from about 57% last year to about 44%. I think mining sectors, the manufacturing sector, continue to struggle because of various issues, challenges related to electricity shortages, as well as a lack of long-term funding. So those are the things that have possibly contributed significantly to downward revision. Adding
to the nervousness in the market scene, of course, is the fact that we've had government surplus in the 9 months to September coming in at $37 million for 2012, and that compared to 191 million in 2011. And the nervousness there, because of course this reiterates the fact that there's no fiscal buffer to actually tap into right now.
True. I think that fiscal buffer is a cause of concern, because previously that buffer was used by government to procure inputs for the next season. So as you can see, the 37 million may not be sufficient to cater for the inputs that we would require for next year. So that's why we've seen sort of government coming into the market to borrow through the issuance of treasury bills. The maiden treasury bills were issued on the 4th of October, where the market was expected to respond positively to the issuance of the treasury bills. And what we saw is sort of a lukewarm response from the banking sector, where out of the $15 million that was tendered, only about 9.8 million was taken up. I think one of the major concerns has been the interest rates that have been tendered by the banks. I think the expectations are expecting high interest rates on the yields or on these treasury bills, but government seems to have rejected that, and that's why the 15 million was not taken up.
Yeah. Well, while we've got developments unfolding on that front, James, I mean, government's also contemplating the introduction of or reintroduction of controls within the financial arena, the banking space specifically, and some saying that this could really lead to an erosion of confidence within that sector and reverse the gains that we've managed to see the sector make thus far.
Yes, definitely. I think the threat of bringing back the controls is a serious issue, and I think it puts the smaller banks on a precarious position, and given that in most cases smaller banks are faced with high cost of funds. So the moment we start regulating bank charges and interest rates, I think we expose the smaller banks to such vulnerabilities. So it's really a cause of concern. And one hopes that from the bank's perspective, they'll continue to engage with the government with the hope of coming up with an amicable position that should give a win-win situation to both parties.